Roshan, let's have the sweet debate discussing the important dates of banking reforms in India, both before and after independence, and extending up to the present day.
Why not? Let's have Rahul.
Let's start with the pre-independence era. The Bank of Hindustan, established in 1771, is considered one of the first banks in India. Although it ceased operations by 1832, it marked the beginning of modern banking in India.
That's correct, Rahul. Moving forward, the three presidency banks, the Bank of Bengal, Bank of Bombay, and Bank of Madras, were established in the early 19th century. These banks later merged to form the Imperial Bank of India in 1921.
Right, and the Imperial Bank acted as the central bank until the Reserve Bank of India, RBI, was established on April 1st, 1935, under the Reserve Bank of India Act, 1934.
Post-independence, a significant event was the nationalization of the RBI on January 1st, 1949. This was followed by the nationalization of major commercial banks. In 1955, the State Bank of India, SBI, was formed by taking over the Imperial Bank of India.
Yes, and in 1959, 7 subsidiaries of the SBI were nationalized. These included State Bank of Patiala, State Bank of Hyderabad, and others. This was a major step in consolidating the public sector banking system.
In 1969, 14 major commercial banks were nationalized, bringing them under government control. This marked a significant shift in the Indian banking sector, aiming to expand banking services to rural areas and prioritize social welfare.
The 1970s saw the establishment of regional rural banks, RRBs, on October 2nd, 1975, to focus on rural development and financial inclusion. This was a crucial initiative to bring banking services to the rural population.
Moving to the liberalization era, the early 1990s were pivotal. The Narasimham Committee, set up in 1991, recommended several reforms to improve the financial health and profitability of commercial banks. These reforms were implemented in 2 phases, with the first phase focusing on structural changes and the second phase reviewing the progress and making further adjustments.
In 1992, the Securities and Exchange Board of India (SEBI) Act was enacted to regulate and monitor India's security markets. The same year, the Special Court Act was passed to form special courts to monitor offenses related to security transactions.
The Recovery of Debts Due to Banks and Financial Institutions Act was introduced in 1993 to establish laws for debt recovery by banks and financial institutions. This was followed by the establishment of debt recovery tribunals in 1994.
In the late 1990s, the Industrial Reconstruction Bank Act of 1997 allowed for the transfer of specific banking company undertakings to promote economic growth. The year 1999 saw amendments to the Foreign Exchange Management Act, FEMA, to regulate foreign exchange transactions.
In the 2000s, technological upgradation became a focus. Core banking solutions, CBS, were implemented to enable 24/7 banking services across all branches. This period also saw the expansion of private sector banks, with licenses granted to banks like ICICI Bank, HDFC Bank, and AXIS Bank.
More recently, the Insolvency and Bankruptcy Code, IBC, was passed in 2016 to quickly resolve non-performing assets, NPAS, and hold promoters accountable for losses and bad debts. This has been a significant step in improving the health of the banking sector.
The government has also been merger-focused. For instance, Bank of Baroda was merged with Vijaya Bank and Dana Bank, while Punjab National Bank was merged with Oriental Bank of Commerce and United Bank of India. These mergers aim to create more robust and efficient banking entities.
Today, the banking sector continues to evolve with a focus on digital banking, financial inclusion, and governance reforms. Initiatives like the Prime Minister's Jan Dhan Yojana, PMJDY, and the establishment of the Bank Board Bureau, BBB, reflect ongoing efforts to modernize and strengthen the Indian banking system.
Absolutely, Rahul. The current era also sees a blend of traditional banking with modern technological advancements, such as internet banking, mobile banking, and the introduction of payments banks and small finance banks. These reforms are crucial for supporting India's economic growth and ensuring the banking sector remains competitive and inclusive.
Thank you, Rohan, for participating. Indeed, it was a nice debate.